Please subscribe, like, and hit that notification bell. Thanks, guys. Guys, silver's down huge today. Gold's down huge. I got super scared. I had to call up my friend and partner, Kevin Wadsworth, to shed some light, show me some charts. Tell me, Kevin, the bull run's not over. I put all my money in silver and gold. Am I trapped? You got to help me out, Kevin. But yeah, look, guys, all kidding aside, before Kevin shows you these critical charts that he showed me just before we started recording, that should really give you, resonate with you guys. This is all stuff there that our members, they get at northstarbatcharts.com. But we really felt that we want to share these critical charts, what we see, what's the big picture for precious metals. And look, I'm not even going to hold it back. I'll stop talking. Kevin, if you don't mind sharing your screen and just tell us, our viewers, what exactly you're seeing right now in the precious metals market.
Yeah, of course. Thanks, Pat. And anybody that's followed us for any length of time on social media, on Twitter, on YouTube here, of course, and elsewhere will know that we use something called a weight of evidence approach for analyzing all of our charts. So it doesn't matter whether it's gold, silver, or whether it's the price of bananas or the S&P index or whatever it happens to be, cryptocurrencies. We use the same technique for every instrument. So there's no bias, there's nothing in there that involves us being biased towards precious metals or towards cryptocurrencies. So as I say, what I'm about to show you is universal, and the same techniques apply to all markets, which is really, really important. And the first thing that we do is we look at what we call a sort of a forest to tree approach. We start with the big picture, and it kind of gives you a situational awareness of where we are and what's going on over the very large time frame. And in the case of silver, the very large time frame pattern is really quite striking. We've got a pretty perfect cup and handle pattern that's been forming over 44 years. We entered the cup in 1979, and then this arc pattern, this arc formation, has broadly guided us all the way back up to the $50 level that we were previously at around about 1980 there, during the time of the Hunt brothers and all that kind of stuff. So silver spiked very, very strongly there into the 1980 peak. Of course, notice the moving average here, and the moving average, if I just adjust it to, it's actually on the 8-year moving average at the moment. It doesn't really matter which moving average you use, because the message tends to be the same, in that you can ignore the price spikes to a large extent. What you really want to focus on is what is the general trend. And by using a long moving average like the 3-year, the 5-year, the 8-year, the 10-year, you get a much clearer picture of what the trend is. And basically, it's from bottom left to top right, ignoring these spikes, these crazy spikes, which very few people manage to take advantage of. A lot of people get sucked in buying at the peaks and selling when it's much lower down. So it's far, far better to focus on the moving average. So the big picture chart, it's a cup and handle pattern with a moving average that is trending upwards over the years. So silver is moving from bottom left to top right. And if we just zoom in at what's going on at the moment, you can see that this cup pattern that we're in at the moment is actually the handle to this much larger cup. And this particular technical chart formation tells us that the probabilities of a move to the upside, an upside resolution way beyond the previous all-time highs, is much more likely than some kind of breakdown and coming all the way down to $14 or less. It would take some kind of major market liquidity event, some kind of financial crisis, to take us all the way back down to the support line near $14. And any break below that would be very unlikely and very temporary if it were to occur. But as things are at the moment, this arc pattern is reliably guiding us to the upside, and absent any kind of terrible market event like the one I just described, then we are trending towards a breakout here. We're trending towards a resolution, and we're trending towards this area sort of between $38 and $50. There's a zone of price action between sort of $38 and $50. And silver is a very spiky metal, as you can see. It spikes very rapidly to the upside, and it drops very sharply to the downside at times. So when we break through a key overhead resistance level, and there's two on this chart actually, one around $25 and there's another one around 28. I know a lot of people are focusing on the 28 level, but I suspect once we get a clear break through 25, then the 28 level is likely to fall pretty quickly, and then the move towards $50 would be likely to ensue quite quickly after that. So I'm focusing particularly on this area around 25 or just over $25, and a clear monthly close above that is what we're looking for. And it's important that we get a monthly close. You can, if you make decisions based on daily or weekly price action, then you can get quite easily trapped and end up getting into these trades before it's the optimum time to do that. You can
Kevin,
see, yeah, sorry, Pat, yeah.
can you go back to that chart? I just want to, just before we move on to this like final and critical chart, there's two things I'm noticing right now is I know I started, it's a crazy, I don't know, silver's down 3 or 4% today, but holy Moses, can you zoom in? Because I could barely see that. Is that still a green quarterly candle?
Yeah, good point, Pat. Yeah, I should have mentioned that as well. I mean, on days like today, when the price is down 1, 2, 3, 4%, this quarterly candle, it doesn't look bad at all, does it? There's nothing scary going on with the price action in terms of this quarterly candle. It can come all the way down to somewhere between, or somewhere around about $21. If I just move this marker up to the current month where we are at the moment, the edge of the arc is somewhere around about $21. So price can come all the way down to 21, and it's just following the pattern. It's doing its thing. It's not doing anything that we need to concern ourselves about or get worried about. So it's all normal price action all the way down to 21. And as you can see, as time goes by over the next few months, it becomes increasingly likely that we see that breakout. So yeah, that's right, Pat.
I'm a lot less scared now, Kevin, because seriously, I was on a day like that, I was super scared. And now when I see that chart and I take a step back, like we like to do, right? Like you said, the forest to tree, it's not as dire as somebody could see, right? Because one day in the future, when that breaks out, nobody's going to remember that 3% down day we had today.
Absolutely. It depends a little bit where you anchor your resistance line as well, but depending on what time frame you're using, whether you're using the candle closes or the candle wicks, but there's a whole zone of resistance and support in here, and you could actually draw your line like that. And it sometimes helps to put it on the line chart. And if you use the line chart, of course, the quarterly close is all the way down here, so you get a very different sort of picture than if you use the wicks on the candles. But well, look, using the line chart here, we're still right on that breakout level.
Wow. So we should change the title of the podcast. Maybe it shouldn't be the end of the world for precious metals, because that looks like it's knocking on a quarterly defined breakout line.
It does, yeah. It could very well be a quarterly defined breakout on the line chart. And the line chart, as I say, it uses the quarterly closes. So, or monthly closes if you're on the monthly chart, of course. And that chart looks very bullish to me. It doesn't look bearish at all. And there's nothing, as I say, nothing concerning, even on a down day today where you've gone down currently about 3%, I think, on the price of silver, but still looks very, very encouraging. And as I keep saying, accumulating physical silver anywhere below $25 and physical gold anywhere below $2,000 is highly likely to ultimately prove to be a very wise decision. So keeping the price of silver below 25 for a little bit longer just gives people a little bit more opportunity to accumulate at those levels. But of course, if you're trading it and you're wanting to take shorter term positions, you want to wait for the confirmed breakout. So a confirmed monthly close above that breakout line, and then on this chart, because it's a quarterly chart, a confirmed quarterly close above that line just increases the confidence levels. It depends on how confident you are at any given point in time. Of course, on a quarterly candle, you could suddenly shoot up in the space of one quarter up to $28 or even more. You see the size of these candles on here can be pretty big. So waiting till the quarterly close, maybe not what everybody wants to do. So you can go onto the monthly chart and you can get in on the action a little bit sooner based on the monthly close. This is the monthly price chart. And again, you can see this very clear arc pattern. And this is the small arc that I showed you a moment ago with a much larger arc on the left-hand side there that stretches back all the way to 1979. This chart's got more detail on it, and it does show you where we have a confluence of resistance. We have the Ichimoku cloud, that's this red and green cloud. We've got this series of red dotted and dashed lines. Those are resistance levels, which we've pushed through. So they're now acting as support. So we've got a lot of support between $21 and $22. And we've also got in there the 36-month moving average, the 3-year moving average, which is currently sitting at $23.50. So pushing through all of that lot at the moment, that's what we're doing. we're breaking through those levels, and the 25 level is shown for you. It starts at the candle at the top left-hand corner, 2011 on the monthly close, and it follows down and it forms the resistance line on all of this price action that we've had since the last quarter of 2020. So breaking out above that 25 level is going to be critical. And then the 28 level, I suspect, will fall fairly quickly after that. There may well be a little bit of resistance at that 28 level as well. I know a lot of people are looking at that, so I've marked it as a critical resistance line. It's certainly a psychological level that a lot of people are looking at. But I think the 38 to 50 target zone is, by the way, I put this chart out, 3 years ago. There have been very few changes needed on this chart. I think I put it out in 2019, 2020. And the only real adjustment I needed to make was to put this larger outer arc on there to take into account the COVID low in 2020. And so therefore we have this outer arc, which in a market panic type event shows a possible support line if that were to happen. So far, of course, price has been guided up by the inner arc, which is the more normal economic sort of backdrop kind of scenario. If we get some sort of major market event, as I say, the outer arc may come into play. But all looks good, despite today's price action being down 3% on silver. We've still got a green monthly candle, green quarterly candle. The chart is just playing out exactly as expected at the moment, Pat.
Thanks, Kevin. And that's why I'm super happy to be signed up for email notifications at North Star Bat Charts. Oh, hold on, wait. I'm one of the owners and authors with you, Kevin. But our members, though, they're lucky because they get email notifications, and whenever we get that confirmed breakout, then they'll get the emails to know that it's time to go in. But more importantly than that, what's also important is often people, they want to confirm breakout, but they don't know about the position size. They wager too much. They don't put a sell stop, right? Because it's all about probabilities. Like you keep telling me, it's all about science, right? So once you're above that breakout line, you have higher probabilities of reaching that target. But there's also a probability for that possible move down. So people need to understand position sizing, putting a sell stop in a secure place that has at least chance, the highest possible, the least chance of not getting triggered out. And also get email notifications from us if ever we reach the target, or we decide that for some macro reason in our weight of evidence, we decide to pull the trigger, like we did with our sugar play, right? We had a target, everybody got in, and we pulled the trigger just a little bit before our target was reached because we saw we were stretched from moving averages. So that's what people get at northstarbatcharts.com. Look, Twitter's fine, guys. YouTube's fine. We help you. We'll help everybody. We can't see the bigger picture. But if you want that extra attention to make sure you're in and out with email notifications, then you know where to find us. Thanks, Kevin. I think I'm going to sleep better at night. I know I'm doing a little devil's advocate, but it's not dire. It's not the end of the world. The bigger, from what I've seen, is there's a huge pattern in play, and we're very close for it to play out. It hasn't happened yet, but once we get those confirmed breakouts, it should be onwards and upwards.
Yeah, absolutely. And we've got a strategy at the website as well, of course. And it's not just a case of buying gold, buying silver. You know, the individual miners are something that we look at very closely. We look at all markets. We look at the uranium market. We look at cryptocurrencies. We look at tech stocks. We look at oil plays, all of these things, energy, all the rest of it. So we're applying the same techniques, and we give the same notifications when we enter a trade, when we exit a trade, and we apply these confidence levels that we are able to derive from the charts, and that's how we get our position sizing and our risk to reward calculations come out of that. We're able to risk a little bit more on the trades that come with the higher confidence levels, and that's what we focus on, of course, for our members at the website.
Beautiful. So much value, man. Thanks, Kevin, for updating all our viewers, and see you guys soon.
Cheers,
Bye.
everybody. Take care. Bye for now.
Please subscribe, like, and hit that notification bell. Thanks, guys.